I don't think it's possible to beat the market because you can never have more information than them. But so, what's your opinion on that?
Well, I mean, there's a number of assumptions here. I mean, we all like to think that the market reacts rationally. Traders react rationally, investors do. But, you know, we're all coming at the market from different angles. Now, yes, the likelihood is always going to be someone who has more information than you. The question is, are we all going to react in the same way? Are we all going to react on the, you know, on the same time frame? That information is as important to them. Does it mean that they are going to actually make a trading decision on it, as in buying or selling, or is it going to be? Or is their trading decision going to be to do nothing, to let their position ride? So, yeah, you know, it's an imperfect world. Efficient market hypothesis tells us that a stock is priced perfectly at every one time because we all have the information is all there in the price. But it might be for that single instant. But you know, there's new information coming at us all the time. It's coming from multiple sources. Yes, the professionals, yes, those institutions who have got the black boxes and have got the news feeds and everything else are probably going to get that news faster, and they're going to be able to process it faster and make the decision faster than you are. But you know, again, what are they looking for? Are they is that information because it's going to cause a market crash, or is that information that's just going to make them, you know, enable them to get a few ticks, a better selling price or buying price by a few ticks? So, you know, I don't really hold by the efficient market hypothesis. I think markets are pretty inefficient. You know, the fact is that we see stocks move dramatically as new information is presented. Sometimes that information takes a long time to be assimilated for the full effects to come through. I mean, you only got to look at sort of what's happened to Tesco recently as a good example of that. So, you know, yeah, we're never. There is always going to be someone who knows more than us, but I wouldn't worry about that too much.
All TA relies on past results, and since past results are already factored into the current price, attempting to find advantage becomes. Oh, sorry, I've lost my bloody thing there. Yeah, attempting to find advantage becomes useless, or does it?
I'm not really sure. I mean, yes. Yeah, I mean, you are factoring, you know, the price of a financial instrument is factoring what has been, what has happened, and what is happening now. That's the idea of it. As far as technical analysis is concerned, I could sort of flippantly say, well, sort of history repeats or even rhymes. So, you know, there is something behind technical analysis. Even to the extent that the fact that we have so many people who rely on technical analysis for their trading decisions makes it become a self-fulfilling prophecy. But I mean, you can certainly see patterns emerge in markets, and for whatever reason there may be, and you can always sort of put the sort of an intellectual reason behind it, or you can just say, well, that's the way it is. It's the way the universe runs, or whatever. I still see that there is value in technical analysis. From my own point of view, it's really as much as anything as to establish whether a market is trading in a range or in a trend. And you can get an idea from that, sort of where your support and resistance levels are. And you know, that's got to be a help. And markets do tend, they're never going to sort of always behave in a certain way just because they have in the past. But you do see patterns emerging, and those are useful patterns. So I would say, yeah, you know, what has happened in the past can be useful in predicting the future.